Committee of the City University Construction Fund. I'm going to ask everybody to silence their phones. I'm going to cue IT to begin the live stream.
Good to go? Okay.
Okay?
Yes.
Okay. I'm calling the September 17th, 2025 Audit Committee of the meeting of the City of New York Construction Fund to order. I note the presence of a quorum. Okay, following action item. 1, approval of the minutes of the September 25th, 2024 special meeting of the Audit Committee of the City University Construction Fund, number 2452. Do we have any amendments to the minutes? Any discussion? All right, I'm going to call for a motion. Oh, yes, I'm sorry.
Motion to approve.
Motion to approve? Okay, second. All right. I'm going to call for a vote. Aye. All those in favor? Any abstentions? No. All right. Motion carries unanimously. Number 2, resolution of the City University Construction Fund approving the annual certificate for fiscal year 2027, number 2453. Resolved that the Fund's Board of Trustees approve the annual certificate for fiscal year 2027, dated September 17th, 2025, in the form attached. And be it further resolved that the acting chairman of the fund is hereby authorized and directed to execute and deliver the certificate on behalf of the fund. I hereby call on Dr. Muhammad Atalia, Executive Director of the Construction Fund, to explain the item.
Thank you, Mr. Chair. Pursuant to Section 6274(7) of the New York State Education Law, the fund is required to produce an annual financial certification. The certification is a letter provided to 6 New York State and city agencies, the purpose of which is to forecast 1, the debt service due to DASNY for fiscal year 2027 on debt issuance prior to the utilization of personal income tax bonds. 2, the tuition and fees to be collected from the university during the next 2 fiscal years. And 3, the fund's cost of administration for fiscal year 2027. It is required that the fiscal year 2025 audited annual financial statements accompany the annual certification when it is sent to the agencies. This year's annual financial statements were prepared by CUCF and audited by the accounting firm Mitchell Titus, who are now in their 6th year as the fund's auditors. Mitchell Titus will now provide a full presentation of their audit findings and results for the fiscal 2025 financial statements. Speaking on behalf of the firm is Assurance Partner Daniel Kinney, Assurance Senior Wendell Young, and Senior Auditor Scott Shoup for the fund's audit. Thank you.
Dan?
Okay. Good afternoon, everyone. Once again, I'm Dan Kenny, partner with Mitchell & Titus, here to present the audit. We're going to go through 3 documents. We're going to go through the financial statements, and then we have a presentation, and then we're going to go through the internal control letter. So if we could put on the screen the financial statements. All right, and if we could go to page 1, the independent auditor's report. So this is where it indicates that, of course, we've audited the entity as of and for the year ended June 30, 2025 and 2024. In our opinion, the financial statements are fairly presented in accordance with generally accepted accounting principles. This is known as an unmodified opinion or an unqualified opinion or a clean opinion. Our audit was conducted in accordance with generally accepted auditing standards. And then under the emphasis of matter paragraph, this indicates that these are just the financial statements only of CUCF as a component unit, and of course it's not of CUNY. Okay, the next page, this is where it discusses the responsibilities of management. It talks about that they're responsible for the fair presentation of the financial statements and that it can also continue as a going concern from the date of issuance of the report. And then the next item talks about the auditor's responsibility, and it lists 5 responsibilities that we have in accordance with generally accepted auditing standards. And then the last item, this is where it talks about required supplementary information, and that's your MD&A. And within your MD&A, it talks about what we do as the auditor with respect to that management discussion and analysis. Okay, now what I'm going to do is I'm going to turn it over to Wendling. She's going to, if you can go to page 9 of the statement of net position, she's going to walk you through the statement of net position, the statement of revenue and expenses, talk about some of the procedures that we perform, and then also go through the notes as well. Wendling?
Thanks, Dan. So starting off with the statements of net position, some of our audit procedures included getting confirmation of the year-end balances for cash and investments. We tested sample of the transactions for the rest of the underlying populations to obtain reasonable assurance of the year-end balances, including performing bank tracing. So some of the items that might pop out at you, for example, at the fourth line, due from DASNY project funds, there was a significant increase from prior year. This year was $75 million versus last year was $15.7 million. A large portion of that increase was related to the work that was performed by the New York Power Authority, over $40 million of it. And that kind of is reflected down in the liability section under contracts payable, $70.7 million this year versus $16 million last year. Some other items that were significant increases included the unearned revenue on project advances. You'll see that the balance this year is $6 million versus last year, just a little bit above $700,000. A large portion of that was for the Hunter Library. CUCF received a little over $7 million in private funding for those renovations, and as of year end, about $1 million was spent and earned. And then now if we move on to page 10, which is the statements of revenue, expenses, and change in net position, you can see that most of the activity has been relatively consistent from prior year, again, except for the project funds that was related to the work performed by the New York Power Authority. That was $104.8 million this year versus last year, $38 million. So a pretty big jump there. And then another thing that we'll be pointing out to you is for the line item, New York State appropriations for the administration of construction projects. Pretty big jump there as well, $15.1 million versus $8.2 million for last year. That really is related to the portion of CUCF's payroll that is reimbursed by CUNY that was not included in last year's amount, but is included in this year's. And then under the operating expenses, you'll kind of see the payment of project funds and administrative expenses reflect those changes above the fluctuations above in the operating revenue section. And then if we go to page 11, that would be the statement of cash flows for the fund. And then after that, we have the notes to the financial statements, starting off on page 12. Note 1, brief background on CUCF. And then we have, starting at the bottom of the page, CUCF's significant accounting policies that goes from pages 12 to 15. These policies include CUCF's policies on investments, deposits, cash, tuition and fees, unearned revenue, etc. And that will end at, again, page 15. So at the bottom of that page is a brief summary of the short-term investments that are held by CUCF. These are U.S. Treasury bills, and we have it broken out, well, they are broken out, by discount rates and also due dates. Okay, so now moving on to page 16. At the top, the commitments for note 4, that would be the DASNY debt service, and we have confirmed the outstanding balance of $242 million with DASNY. Right below that was the related party transactions. This describes the transactions between CUCF, CUNY, and DASNY. Paragraph 2 kind of breaks down that $14.8 million in administrative expenses that we saw on page 10, breaking it down into $10 million in salary, $4 million in fringe costs, and a little under $700,000 for other administrative expenses. And briefly touches on the amounts due from DASNY for projects that we saw on page 9 of the statement of net position of $75 million. And then finally, on the page 17, site development agreement for note 6. This has been consistent with prior year. It hasn't really changed much, but we do want to point out that through our discussions with management, the additional sentence at the end just states that CUCF will no longer be obligated to maintain the project site in the future years. And we have our subsequent events note. There was nothing that needed to be additionally disclosed.
Okay, thank you, Wendelin. All right, any questions on the financials right now?
Questions usually at the end.
Oh, it's at the end? Okay, sorry. All right, let's go to the presentation now. Walk you through that. And if we can go to page 3 on the table of contents, this is what we're going to talk about. All right, we'll go through the highlights, team members, fraud considerations, summary of audit results, and the required communications. Okay, and on page 4, we've already discussed the scope of the audit. Of course, it's as of June 30th, 2025. We're also going to be preparing the tax return and the review. The status, we're finished the job. We're going to be issuing, as mentioned, an unmodified opinion, and the tax filings, those are in process. There were recorded misstatements during the year, but there were no unrecorded misstatements that were identified during the current year. And then we have a comment on the internal control letter, which we'll go to after we present this document. All right, moving on to page 5. This is where it talks about our audit approach. And under the planning.
I'm sorry, I have a question.
Sure.
Can you define what a recorded misstatement is and what an unrecorded misstatement is?
Sure. So a recorded misstatement is an item in which we identify during the audit when we receive the trial balance and we go through our procedures. And, you know, there's a certain area that should have been recorded differently. And so those items are going to be identified in the internal control letter. Once after we present this, you'll see that. And then an unrecorded item is something that, let's say we look at it and we feel like there should be an adjustment made, but management doesn't want to make the adjustment, or it's so immaterial they don't have to. So those are considered the unrecorded items, and you do not have any items that are unrecorded. All your items that were noted, the adjustments were made and reflected in your statement. Does that answer your question?
Thank you so much. Thank
Sure.
you, it does.
Yep, okay, great. All right, so under the audit highlights on our approach, so what we do is, of course, when we plan the job, we're trying to understand the needs of the entity, what the deliverables are. And then then we go through our risk assessment and we look at the internal control environment, and this is where we modify our approach. And then during the audit, we have frequent, weekly, sometimes there's communications daily, you know, with management to get all the information needed for the audit. And then, of course, the final phase is conclusion and reporting. That's where we're going to do our quality control review and wrap everything up. And if you go to the next page, this is our team members, myself, Uzma Malik, Scott Shoup, and Wendelin Yang. And the next page, in every audit, what you have to do is you have to have a fraud brainstorming session, and it's called SAS 99. And what we do is we talk about the 3 different elements that have to be required when fraud happens, and that's the fraud triangle is called it's rationalization, incentive, and opportunity. So we sit there and have a brainstorming session, and we try to figure out, hey, could management do something in this area or that area? And once again, it's a requirement under generally accepted auditing standards. So we do that, and then what we also do, as noted on the screen, is, you know, we consider any material fraud risks that the entity may have. We conduct interviews with various, you know, members of management. We review and test journal entries, and the journal entries have to be tested after year end because you have to have all the entries. It can't be done in interim. And then, of course, we're going to look at any estimates or any other evidence that's provided where there's any fraud. And later in the presentation, it says there were no instances of fraud noted, so I thought I'd bring that up now for you. Okay, next page. This is the summary of audit results. So under 3 areas, revenue recognition, cash and investments, and accounts receivable. So under revenue recognition, Wendelin went through this a little bit, but of course we confirmed the tuition and fees received from CUNY. We also test details of the revenue. We didn't have any revenue recognition issues, except there were some adjustments made to the unearned revenue balance, and that'll be noted in the internal control letter as well. And then under cash, of course, we confirm cash and investments. We look at the GASB 40. Your disclosures are proper within your financial statement. No exceptions were identified at year end. However, during the year, and this is in our internal control letter, but during the year, there were some bank reconciliations that weren't done exactly how they should be. Those were corrected at year end. And once again, that's noted in the internal control letter. And then under accounts receivable, this is where we test on the next page. This is where we test subsequent collections, and then we look at significant balances there. No exceptions were identified, except we did have some audit adjustments made to the due from CUNY. Once again, we'll go over that. And then under liabilities, we performed a search for unrecorded liabilities, and we tested the due to other governments, and of course, we looked at contracts payable, and there were no exceptions that were identified there. And if you go to page 10 to 14, this is the required communication. So our plan, scope, and timing of the audit, that's in our engagement letter. And we have complied with all the ethic requirements regarding independence. Your significant accounting policies, that's in note 2. Wendelin went through that, and that was pages 12 to 15. There were no changes in your accounting policies. If you go to page 11, there were no significant accounting estimates, nor were there any key sensitive estimates, and we did not identify any actual or suspected instances of fraud, and there were no significant difficulties encountered during the audit. You go to page 12, this is, once again, it talks about the uncorrected and corrected misstatements. Once again, all the corrected misstatements were made, and you didn't have any uncorrected misstatements. There were no significant or unusual transactions on page 12, and then also there were no disagreements with management. And then on page 13, we actually have the rep letter. We received that. There were also no management consultations with other accountants on any issues, nor any significant matters, findings, or issues to note. And there were no instances of noncompliance with laws and regs. And then on page 14, on the other information, this is where I talked about, in my opinion, or in our opinion, I should say, in our independent auditor's report under RSI, it talks about the management discussion and analysis and our responsibility in management. And then under the last item, there were no conditions or events that would indicate any substantial doubt as to whether the entity can continue as a going concern. Okay, so that concludes the presentation. Now let's go to the internal control letter. So this internal control letter, when the auditor issues this, you'll notice in the letter, it doesn't give an opinion. It doesn't say, in our opinion, internal controls are fairly presented. But what is required is when you perform your audit, in planning and performing the audit, we have to consider the internal control over financial reporting as a basis for designing our audit procedures. And that's in accordance with generally accepted auditing standards. And it's just limited really for that particular purpose. Okay. And here indicates, you can just stay on this page, but through the letter, there's 3 deficiencies within internal control, and that constitutes a material weakness. And of those 3 deficiencies, 2 out of the 3, you'll see the bank recs and the invoice processing, these were noted by the internal auditor. So the internal auditor did reports during the year. We looked at it. They covered the period that we're doing the audit, because remember, we're doing it from July 1 of 24 to June 30 of 25. So there were periods that they did the report on that covered it. So we have to note in here what they found. And those particular items, the 2 out of the 3 items that the internal auditor came up with those items were corrected at year end. So at year end, we didn't have any issues with the bank recs, and then the invoice processing, we didn't have any misstatements relating to the accounts payable, okay?
So just for the record, any issues were corrected, is
Yeah,
that correct?
yeah, any issues on the 2 out of the 3.
All right, what's the third?
Okay, so let's go to the next page. Well, sorry, so go back to the first one. So this first one, year-end close process. So during the year-end close process, there are 4 entries. You'll see it. It'll go 2, 3, and 4. We'll stay on the first one. So these were 4 misstatements that we noted. Management made the adjustments, so they are reflected in the financial statements. And the first one related to unearned revenue on project advances. You know, says what it is right there. And then if you scroll down, the second entry related to decrease in payments to DASNY. The third one was decrease in due from City University of New York. And then the fourth one was decrease in unearned revenue. So as I mentioned in my presentation, when I talked about, remember the unearned revenue, I said, hey, there were exceptions. Well, this is what this relates to. And 3 out of the 4, the entries that were made were reclassifications within your statement of revenue and expenses. And there was one item that had an effect on net position. And the one item that had the effect on net position was item number 2 for the debt service, and it resulted in actually an increase in net position. The other items were adjustments that were made that were just made to increase something and decrease something within, the statement of revenue, so there was no effect on the change in net position. Okay. All right, and then in 24, as Wendelin pointed out in her presentation, in 24, in the admin expense line, it should have been a certain amount, and then the other line accordingly the same thing. So that's why those numbers looked a little out of whack, and that was in 24. All right, so that is relating to the financial close. Okay, and then the next 2 items, this is where the internal auditor, once again, they did the review, they came up with it, they looked through bank recs from the period July 24 to January 25. Once again, CUCF corrected the July 24 to September 24 bank recs, and they caught up and they prepared the other recs from October to January. And we did not identify any significant misstatements in the bank recs at year end. All right, and then on invoice processing on the next line. So on the invoice processing, once again, internal audit report, or audit department, they prepared reports for the period September 23 through October of 24. And remember, our period that we're covering is that July, August, and September, so that's why we have to note it. And there were delays in the level of processing those particular invoices. Once again, and we believe it's our understanding that the delays were due to the understaffing that you guys had during that time period. And at year end, once again, we didn't identify any significant misstatements in AP and accrued expenses. Okay, so that concludes the presentation. I'll be happy to answer any questions. Oh, I have to thank management for their assistance.
Right.
Oh, sorry.
I'm not prepared to bring this motion forward to approve this at this time until I get some more clarification on that letter.
Okay.
I'm just not, I mean, I appreciate you, informing us, but I'm not prepared to bring it at this time.
Okay.
So what's needed, Brian?
I have to go through this. Maybe you can give me a call.
Sure.
On item number 2,
Yep.
with the payments to
I'm sorry,
dad.
could you just speak up? I'm sorry.
Sure,
It's not-
sorry. Yeah, I'm not prepared to bring this forward for approval at this time till I get some more further clarification on what the shortcomings were internally. Maybe you could tell us a little bit more about item 2
Item 2 on the,
regarding, I believe you said, the payments
On
to
the-
DASNY.
okay, on the debt service.
Yeah.
So during our audit procedures, we identified variance between what we had expected, to be recorded on the trial balance for CUCF and what was actually recorded. Through talking with management, we noted that there was an overpayment that was being recorded. It was related to FY '24, but was still on the books for FY '25.
Right.
And expenses will, lower the net position of the fund. And basically what we had to do was we had to back out that overpayment because it was being double counted essentially. And that amount was, I believe, 4.4 million, right?
Correct.
Yeah, 4.4 million.
4.4, not in the fund's favor, or?
It was, yes, it was
was-
being
Right, it was a-
overstated. Expenses were overstated at that time.
So it was an error in the fund's favor?
Yes.
Correct.
Okay,
Yep, it increased net position, right.
okay, it increased the net position.
Right, and all the other entries, it wasn't any effect on net position, it was reclassifications.
Okay, fine. Fine, okay, I will bring this forward then,
Yeah.
as long as I know where this is
Yeah.
going.
Okay.
Okay, all right, I'm gonna call for a motion on this item. Thank you.
So moved.
Is there any further discussion? Anybody opposed or abstentions? Hearing none, I call for a vote. All those in favor? Aye. Okay, motion carries unanimously. If there's no more business before the committee, the meeting is now adjourned. Thank you, everybody.
Thank you.